Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Oana.
Okay, we are going to do an update to the Las Vegas real estate market. We first want to say thank you for being patient. We spent the last 2 weeks in Japan. We got to visit a bunch of cool places there. We actually did 2 videos there. One was the market update, and what was the other one?
It was the apartment that we stayed in.
It's an actual apartment. So we did a video tour of it, so you can watch it. I'll put links in the description. You can watch those if you want. Okay, so what we're going to do is we're going to go through the Las Vegas real estate market here. And it's updated. This is data that literally just came out, so it's current as of right now. I'm going to start, though, with this article that came out. This kind of caught our interest. We're going to talk about a couple of things in here. It says, with high housing prices in Las Vegas got higher in March. LVR reports, that's the Las Vegas Realtors. It's a report that they did. So here's the first quote from the article. A report from Las Vegas Realtors shows single-family homes increased by over 1% over the past month. Remember, this was in March. And now at 465, it's 5,000 more than the median price from February and 9.4% higher than price a year ago. 9% in a year is pretty high.
I mean, think about it. If you've got a $500,000 home, 9% is $45,000. That's a lot of money.
Yeah, and normally what we've had from like 2013, well, maybe 2011 to 2019, we had like 4 to 5% a year, just very normal price appreciation. It's been a little volatile. We had, prices went up 50%, then went down like 8%, and then went up 9%. So it's kind of crazy. This is why we say can't really time the stock market, the real estate market. But there's always one thing that's true. Generally, the longer you own a home, your higher chance of being able to tap a bunch of equity is much greater, right?
Right. So what we're saying is that over the long run, real estate generally increases. Not in all markets, not every home. We're aware of that. But as a generality, real estate does increase over the long term. Okay,
here's another quote. During March, LVR found that 26.1% of all local property sales were cash transactions. That's a little over a quarter. That's up from 24.5% a year ago, but still far below the May 2013 cash buyer peak of 59.5%. So there's 2 things about that. First of all, 2013, you and I probably sold 300 houses.
Probably.
All listings. All listings. We were seeing a lot of cash purchases. What would you guess the median price was in 2013? Okay, given today it's like, 465.
Right. So 2013, I would guess it was probably right around maybe 190, 200.
Yeah, it was closer to like 150 or 60. But it was much lower. And when you're in that low price range, you're more likely to get cash purchasers. Investors came into the market big time. Matter of fact, we had a report from one of the years, 2009 or 10, that over 50% of all home purchases were investors. Okay, so that's the first interesting thing. The second is that even with the prices what they are, 26% were cash transactions. Because a lot of people have been saying this whole thing about, well, who can afford to buy? Like nobody can afford to buy. But still, you've been the broker on transactions that were multi-million-dollar deals, and they were cash.
Right. So, we've talked about this before. The higher the price point, the more likely it is it's going to be cash.
Yeah. Here's another quote from the article. The median price of local condos and townhomes sold in April was $290, up 7.4% from $270 in April of last year. So it says that's an all-time high, surpassing the $287 mark set in August of 2022. Now remember, we're talking lower end, so they're less affected by interest rates.
Well, so the low end is kind of a funny duck, right? Because you've got investors who are going to go in and pay cash, or you have owner-occupants that don't have a lot of money, so they are very much impacted by interest rates.
Okay, here's another one. There's 2 things in here that's interesting in this quote. It says, by the end of April, LVR reported 3,476 single-family homes listed for sale without any sort of offer. Okay. We're going to talk about that for a second. Hang on. I'll read the rest of it. That's down 7% from 1 year earlier. Meanwhile, 1,248 condos and townhomes listed without offers. in April represented 29.5% increase from 1 year. Okay, it sounds bad that they're down 7%, but that means that the number of homes for sale is less because there's less people selling.
There are less people selling, and as far as the number of homes without offers, that's very misleading because remember, that just has to do with self-reporting, right? So agents self-report if they have offers or not. And we do not, I don't know anybody in the Las Vegas market who actually flips the little, flips in the MLS saying that we have offers. So we will put a property as having an accepted offer, but not as just having offers.
So here's what I want to talk about. When I was on the MLS committee, they got very angry with people like Oana and I, who had hundreds of listings, that they would call on a property. We would say, we already have 5 offers. And they say, you guys are wasting our time. We want you to put in the MLS that the property has, if it has offers or not. And we voted on it, and I was the only one that voted against it. And finally, I said, okay, well, I want a clause in here that says, but there's not mandatory, no fine, because the problem is, if an offer comes in and then the phone rings while you're sitting there looking at the offer, and they go, hey, yeah, you don't have any offers, right? And I go, yeah, I just got one. Oh, well, you didn't click the thing in the MLS saying you had offers, so I'm going to turn you in and fine you. So I said, this could get really ridiculous, and it's really hard to track. And they go, okay, we'll put it in there, but we won't make it mandatory.
Right. The other issue with it is, for example, let's say you have a home listed for $500,000 and you get an offer for $300,000. Okay, well, yeah, you have an offer, but it's not an offer you're actually going to look at, or your seller's going to entertain. It's going to be rejected out of hand. So again, that doesn't mean anything.
And actually, the reason I won this when I was on MLS committee, and I had more listings there were 12 of us on the MLS committee. Mm-hmm. I had more listings than all other agents on the MLS committee combined. Mm-hmm. Okay? So they were super jealous, and they hated we were called REO agents. We did all the bank-owned sales. But the key thing that really won this was you can't force a seller to disclose the offers. Mm-hmm. And that was another one of my points, is you can't tell the seller, you're hurting sellers now because they may not want that disclosed, right? Mm-hmm. Okay, so now what we're going to do is we're going to jump right into all the data. Let's start here with the real-time market profile. This is mostly what the data normally looks like this year. We'll grab a couple of these and zoom in on them. Mm-hmm. But median list price hasn't really changed. Price of new listings hasn't really changed. Price per square foot hasn't really changed in the last 3 months, maybe 2 months, but it's up from February still. 267 back then is 274 now. Days on market and all that stuff is pretty normal and everything. What really kind of got my attention on here, and we have a whole slide on inventory. One, at median rent, February 23rd, median rent was $2,200 a month. Mm-hmm. As of Friday, it was $2,395.
Ouch.
That's almost 10% 3 months.
Right.
But now remember, these are not perfect numbers. Okay,
so what I want to point out is a lot of this just has to do with the mix of homes that are for rent on the market. Okay. So please, you're welcome to put whatever comments you'd like, but please understand that we're not suggesting that rents went up 10% over a month. What we are suggesting is that this is what the numbers show right now, and it more has to do with the mix of homes than with actual rents going up. Have rents gone up? Yes. Have they gone up that much? No. And we won't really know if this is just noise or if it's a trend for a few months as we track this and we see whether it has legs or not.
Yeah, that was kind of the big thing there. Okay, so here's the market action index. Pretty much those humps are all above where it says May. Mm-hmm. That's usually the hottest time of the year for all activity. Mm-hmm. I mean, homes are still selling. Homes are still coming on the market at higher prices. They're selling for more. This is sort of how hot the market is. Mm-hmm. Those two humps you see, 2021 and 22, were super artificial. We haven't seen that for over a decade. Mm-hmm. Even the last 2 years are still a little bit higher. Normally we see 40 to maybe 50. 40 to 50, 40 to 50. It got super hot. At one point, it was almost 90, the market action index. Basically, everything sold. Half the properties sold in 7 days. That means if everything on the MLS would have sold out in 14 days if we hadn't had new listings, right? And then you can see at the very end that it's doing its normal thing, what it normally does this time of year, where the market starts to chill out a bit. Inventory, Oana, it is rising a little, but not as much as it rose in 2022. And it doesn't look like it probably is going to even do it at 21. It has been within 200 listings of the same number, call it 2,100, maybe 2,150, for a year and a half.
Right.
Almost. The number of listings, May of 2023, we went through the whole last fall, which is that little hump there, with very little increase in inventory. And if you look at 2022, we got back to normal market and then it just went away. Oana, why with high interest rates, is there not a ton of inventory? You would think people would be like selling to sell their house before the market crashed and take all that equity and then buy the house back next year at 50% less.
So first of all, we don't know what the market's going to do. Second, people are not selling because they have these amazing interest rates that they don't want to give up. Third, and I think this is not something that we've talked about a whole lot, and I think it really bears consideration. As Todd said at the beginning of the video, we've had this massive appreciation over the last 5 years. Well, if you've had this massive appreciation and you sell, not only do you give up your 3% mortgage, but now you have capital gains. So that's the other thing that people are shying away from. They don't want to give up their 3% mortgages and they're not so keen on paying capital gains. Maybe there is another property that they would prefer over this one as an investment, but between a 3% interest rate and capital gains and higher home prices, that's just a triple whammy that a lot of people are just staying put and they're not selling. Now, will they hold on forever? Well, forever is a long time. But unless they have some other higher and better use of their money, most people are not going to sell anytime soon.
Yeah, and we, because we mainly work with listings, and I'll do a promotional plug here. If you're thinking about wanting to sell your house, just reach out to us. We'll have a conversation and talk about it. But we always ask, what's your reason for selling? Because we just need a better idea of timelines and things like that. It's always good to ask them the motivation. And we don't disclose that, by the way, to the buyer. It's confidential, but we just like to know. But it's interesting that almost nobody, I don't think we've had anybody tell us in the last 4 years, they're selling because they're going to put it all in the stock market because they think they're going to get a better return, or you could lose all your money in the stock market. And we've had anybody say you're going to put it all in Bitcoin or anything like that, right?
No, but people do have higher and better use for their money.
Yeah.
And their life circumstances change, so there are reasons for people to sell. So if you have a reason to sell, please reach out to us and we'd love to help you.
Okay, here's the last chart, price per square foot. If you look at this, pretty much we had the little hoo-yah where interest rates shot up and a bunch of people dove in it, flooded the market, artificially pushed up prices. That was an anomaly from interest rates going from under 3% to 6.5% in about 6 or 7 months. Interest rates literally took off. And people could see this was going to happen, so they basically flood in. But if you really just chop that off and you can pretty much draw a line through this. What's so shocking about this is if you watch the Crash Bro videos, they make it look like home prices have gone up 5 to 1, some crazy ridiculous amount every year for the last 5 years. And that hasn't happened. This is pretty normal activity, what you're seeing here. And this is the highest, that little diamond is today, and it's higher than any day that we've ever had in the past, price per square foot of these homes. So, and then just like Wanda said, you have to be careful with median price because it's mix of homes. We had a lot of people in, when interest rates went up, they bought cheaper homes. So now there's more sales at the lower end. So maybe it appears home prices fell more than they did. And then if you don't have luxury homes selling, which sell at a higher price per square foot, that pushes price per square foot down. So this is what we do. We just show you the data. And then we let you kind of figure it out from there. But we're not trying to tell you what's going to happen. We just show, hey, this is what's happened in the past and what may happen in the future.
Right. So, but if you have a crystal ball and you want to leave us a comment and tell us what you think is going to happen, please do. We always like hearing from you. We appreciate your comments. We appreciate you participating, and we appreciate you watching the video. So in order to keep on watching these amazing videos, please subscribe, hit the notification bell, share the video and help our channel grow. Leave us comments that are real estate related, preferably.
Yep.
Watch the Japan videos. They're kind of fun. Talk about doing a market update at a shrine. It's kind of cool.
Mount Inari, or I forgot what the name of the shrine was.
So, that's kind of cool. And watching the video about the apartment that we stayed in Osaka, that was kind of fun. So please feel free to watch those videos and comment on them. We had a really good time and hope you have a good time watching them.
Yeah.
All right?
That's it.
All right. See you on the next video. Bye.
Bye.